So we finally got some actual tax language from Congress about the no tax on tips. And if you stay to the end, I'm going to tell you what you need to be doing now, even before this gets passed into law. So let's take a look at the actual legislation itself. This was a draft we got from the House yesterday. People are still going through it, but you'll start to see how this all begins to take shape. We got 389 pages, and on page 23, we started to get section 110101, no tax on tips. And basically, this is allowing for an above-the-line deduction on tips. And they're going to define which industries, which categories of employment typically would qualify. There's going to be some additional regulation on preventing abuse. So you're not trying to reclassify income. They have to be qualified in that they are voluntary. You can't be a highly paid employee. You can't be an employee of a specified trade or business. If you're a lawyer and you receive a tip, that does not get excluded. And other such requirements as may be established by the secretary in regulations where other guidance are satisfied. You have to have a social security number. So if you've been ITIN, then you're not going to be able to deduct your tips. So here's the important thing, is that we got deduction allowed to non-itemizers, which means that just a few years ago when we had a special line item for charity that was not part of the itemized deductions, we're going to have a similar kind of thing for these tips. And actually they're bringing back the charity thing as well, but that's a separate issue. So most importantly, they're also extending FICA tax credits for tips to these other industries: barbering, hair care, nail care, aesthetics, body and spa treatments. If an employer pays an employee's portion of Social Security and Medicare taxes on their tips, then the employer gets a tax credit. So the most important thing for all of my self-employed hair care people, for nail techs, if you have your own business and you are receiving income through cash, credit cards, Stripe, or whatever, you have to make sure that you are separating your job income and your tip income. If you do a haircut and you charge $40 and somebody gives you a $10 tip, make sure that in your own records, you can actually tell the difference between the service portion and the tip portion, because you're going to need that level of reporting to be able to exclude it later on. Because if you just have a Stripe income of $50, when you do your taxes, you're not going to know this much was service, this much was tips. Right now, because we're in May, we can start to go through your records and pull out those distinctions. If you can't, then it's time to start digging into your records, try to match up. Susan had a $40 cut and I got $52. That means $12 was tips, and start separating out those amounts. So that's your action item for right now. Going forward, if this gets passed, then the credit card companies and other payment processors are going to be required to break out those differences in their reports. So it should be taken care of automatically, but that's not going to help you from January up through whenever this gets put into place. So that's your takeaway for right now.